So, should we buy or sell the South Korea ETF? First off, read this disclaimer carefully. Then, of course, do your good deed of today by liking and subscribing. So, here is South Korea. I have just classified it as North Asia. Basically at the 52-week lows, minus 38% bear market. Here are the weekly data points, big picture, and the thing is that we have seen a very protracted sell-off here. We can see that price has fallen down to a very interesting level where there's been a lot of activity in the past. So this is a level where we would expect the bulls to do something if they are out there, sitting on the fence. The interesting thing about the price action of this ETF is that it has a very clear tendency to just move in cycles, up, down, up, down, up, down. Which means that buying low, it does have a tendency to be rewarded. I did try to draw in some time cycles, but they have really differed over time, so it was a bit messy. Looking at the daily data points, the bears are very much in control, for sure. If we go here and look at the PPOs and the RSI, especially the RSI here. The only time where we had a lower RSI was a little bit here during the C-19 lockdown and during the global financial crisis. We are very, very low. Very, very low indeed. So let's look at some of the previous times, like here. So this is the C9. No, this is actually not the C19 lockdown. Interestingly, this is actually in 2015. Yeah, buying the RSI here was very profitable. If we go a bit further back here and look at, the global financial crisis. So we did form a very low, deep low here, and that was a good time to turn bullish on South Korea. So this is just, so I accidentally opened an ad, and that is an absolute cardinal sin on the internet. Then pandemonium will be unleashed. Okay, anyway, looking here at, the daily data points like that, the RSI and the PPOs, this is very interesting. This is more interesting from a bullish perspective than a bearish perspective. So in my notes, I write RSI support on the weeklies, and I give the bulls a 5. While it is of course fully possible for the RSI to go even lower, it's just a question of probabilities. It is also frankly a question about market psychology. If I was massively short this ETF, I would be terrified of this RSI level. I would look at the past, then I would think to myself, might I be a bit too piggish as a bear? Maybe this is really a time to close out some profits, which means that I would have to buy back the shares that I sold. Let's look at the seasonality. So to the right here, we get the average data, and we do see that the 6th of July, over the last 5 years in green, 7 years in blue, 10 years in red, it is a very good time for the bulls. And that is right around the corner. That is the coming week. Looking to the left here, over the last 5 years, we do see that July, it is a bit messy. Looking here on the average data, we do see why. It usually is very strong early in July, but then it does have a tendency to give some gains back. If you look here at the last 10 years, then we do see that July is a 50-50 month, but then August is stronger, and then September is the strongest month over the last 20 years. So this is big picture. July is one of the strongest months for South Korea. It's in the 4th place. August is a bit messy, a bit of a pullback, give back month, but then September comes back with a vengeance. And that is also something we see here in this, the average data here to the right. So it's a bit of a wavy formation. But that is something we also saw in the charts. There was a tendency for there to be more protracted time cycles, but also these smaller ones. So the seasonality score is 4. This is pretty interesting here for the bulls. Let's look at the fundamentals. So I think it makes a lot of sense to compare South Korea to Japan. I think the person that is considering to get some exposure to this territory might compare these two. When we look here at performance year to date, we see that Japan has lost a bit less, minus 20% versus minus 25%. Beta is much lower for Japan. Price earnings, it is a bit lower, 17 versus 18, and the yield is a bit higher. Looking here at the holdings, we see many globally very famous companies. Sony, Toyota. You get Samsung in South Korea, Hyundai, Kia. So if we go a bit further down here, then we can see the sector breakdown. Pretty big difference here, frankly, when it comes to that. So really it depends on what you want exposure to. And here is the market cap breakdown. I think I will give the bears 1 here on the fundamentals, simply because, the type of person that look at fundamentals is more likely to be a bit more attracted to Japan and might decide, to not go for South Korea. However, one could argue that it is more fair to compare South Korea with America. And if we do that instead, then we do see here that beta is rather similar. But on the price earnings, then all of a sudden South Korea looks, better, with lower price earnings. But it loses a bit here on the yield, 0.80 versus 1.22. When we look here at relative performance and we go long-term weekly data points, we see that there is a 77% positive correlation between South Korea and the S&P 500, 49% here with China, but 94% here with Japan. So the comparison sort of certainly makes sense when we look here at the correlations. In terms of India, we do have 9-ish%. Daily data points, 94% S&P 500, 74% with China, and 98% here with Japan, and 88% with India. So what happens with Japan is very likely going to affect South Korea. And we do see that in Japan, there's been a very substantial pullback here in the charts. Weekly data points have fallen back to a level that it is frankly dangerous for the bears, even though the bears are in control. Looking at RSI and PPO, this is dangerous territory for a short seller. Yes, it is fully possible that we will go lower. We have been lower in the past. It's just that there is a very high risk of a counter trend, and that would be a rally. Looking at the daily data points, we are emerging from this surgical level here on the low end of RSI, the 30-ish level, and there is some low-ish forming behavior here on the last days. If you look at these two candlesticks, the bears try to push lower, but then we close higher. Try to push lower, and we close a bit higher. This is the type of candlesticks we tend to see when lows are formed. When we compare South Korea with Japan, we do see a rather interesting technical pattern that could be rather favorable to South Korea. This is a bit of a noisy inverse head and shoulders pattern, which is, a bullish technical pattern. What is even more interesting is that we have seen inverse head and shoulders here in the past that have resolved in a bullish direction. You also see back here as well in 2013 and leading into 2014, we also saw an inverse head and shoulders pattern, also way back here. So basically, inverse head and shoulders, they do have a pretty good track record for this pair. We are also at a low end of RSI that has a tendency to lead to reversals. So this is very interesting indeed. If we go here and look at the seasonality for the pair, yeah, so South Korea, it does have it has a clear tendency to underperform Japan leading into early August. So that is just something to take into account. So let's now compare. Yeah, let's take well, maybe we should take Japan against the S&P 500. Massive just underperformance. Yeah, substantial. Let's just quickly look at the seasonality like that. So we do see that over the last 10 years, Japan has a tendency to outperform here America leading into early August. Same thing over the last 7 years in blue, and around 11, 12-ish of July, that is when the outperformance has a tendency to start for Japan. I will give the bulls here a 6 on relative performance. We saw some really interesting things here. So the entry signal stop loss is RSI support here on the weeklies. We do have a 3.5 here in favor of the bulls. So more reasons to be bullish than bearish on South Korea. So we have some time for other charts. So here is Samsung Electronics, the one that is listed on the London Stock Exchange. Yes, we have just absolutely eviscerated all kinds of moving averages here on the weeklies. So let's look at looking at RSI. This level was very buyable in 2008. It was also very buyable in 2015. We have never been lower. Frankly, this is a very interesting level that one would expect to form potentially a major low. Here is Nintendo, the ADR. So we do have, the red 200-week moving average. It's been extremely buyable for a long time, but it has now become a resistance level. So that is definitively something to look at going forward. A very critical level. Now let's look at Sony. What is Sony? I think it is SNE. No, it is Sony. Yeah, so Sony here, okay, talking about, the red 200-week moving average, we are extremely close to that level now. You saw that the bulls, they got into this stock as we approached it in 2016. So it is definitively a zone where there is demand, and we have seen a very substantial repricing of the stock. So this is also one to have on your radar. Here is a very interesting chart. This is Wayfair. So look at how it had this extreme rally here in 2020, leading all the way up here. Let's just measure it. So we go from this low here, and yeah, make 1,456% gain, and almost every cent of that is given back. It is just absolutely amazing. And Wayfair has done this in the past. If you look at this rally here as an example, from this low to this high, massive gain, and yeah, everything is given back and more. And so Wayfair has a history of doing it. It also means, though, that this is a stock that potentially is becoming very buyable. Here is a stock called Lumber Liquidators, and you do see that, yeah, there have been some times like back here where we were even lower. Here, it was very buyable at this level. Here as well, it formed this consolidation pattern that resulted in a very big rally. Am I saying that Lumber Liquidators is an extreme buy at these levels? No, but I'm saying that it looks way more interesting as a bullish candidate than a bearish candidate. If I were to short Lumber Liquidators here and look at this chart, I would feel a bit uneasy. So we have looked at a bunch of stuff now, very interesting things happening here with the South Korea ETF, and there's a bunch of other charts that looks very, very intriguing. But as always, you don't simply look at the technicals, always consider seasonality, fundamentals, and relative performance. because the more participants in the market whose behavior you can predict or at least guesstimate, the higher the odds that you will be satisfied with the results. Because if you purely trade on like technicals or purely seasonality or purely fundamentals, then whatever happens in these other domains can, catch you very unaware.